Hey there, Jack here from 9 to 5, and in today's video we're going to seize on a very rare opportunity. And that opportunity is where I get to make a video while trading during the actual trading hours of the day. Here it is Monday, March 19th. And that's because unfortunately I have a sick household of girls, and so I get to work from home, and during a little bit of a lull during my lunch period, let's go ahead and do a little bit of trading today. So the purpose of the video today is to place a trade with you in the desktop platform of Tastyworks. It's also to walk through kind of how I do my daily observations and management and position kind of checking in on a daily basis. So let's go ahead and minimize me and dive into the platform here. So I don't use the desktop platform all that much, and mostly because it had been buggy when it first came out, but now it's more so simply a familiarity thing for me, as well as the ability to tap into this through the firewall at my work server, so I'm not able to get at this while I'm at the day job. So what I normally do is use the web platform. So a new feature that came out recently, which has absolutely made the desktop platform fantastic, is this analysis feature. So let's go ahead and dive into that by showing you when I first log in on the desktop platform. Generally, the thing that I do is I go to my watch list tab here and I put on the positions watch list, and that shows what I currently have on in my portfolio. And as you click through, what's great about the desktop platform is it changes everywhere. So if I now go to the trade tab, for example, and it'll show the table view, it is on this position that I clicked on here. So once you click on a position, the first thing I like to do, I'm a very visual guy, I like to do my analysis visually. So you can click on this analysis button here, and this was kind of the newest feature that they added in, or one of the new big features that they added in here is this analysis view. And what that does when you click on it is it pulls up what you're kind of familiar seeing in that view, the analysis view on the web platform, which was very useful for me because what I like to do is, showing where the current position is here. I like to make my management decisions really based on where my short strikes are. So in this example, I have my short strikes, I think that's at 170, let's see here. That's at 179, and my other short strike here at 164. So even though I am getting a little bit clobbered on this position here today, you can see that right now for my Q's position, I'm down today. It's actually much improved from where it was earlier just before I cut this video. But you can see from like a overall perspective, I'm down $100 today. Not fantastic. That actually made my entire year to date go from positive to negative, but I'm not upset with it. I mean, if you look at what's going on in the markets right now, kind of a bloodbath, right? And this is not what you want to see on a Monday morning, but it's also very good for volatility. So trying to look at the bright side here, we're going to get some good vol out of this. So I definitely want to place a trade today with this kind of negative action. Anyways, so what I like to do when I'm flipping through my positions is check to see if my short strikes have been breached on any of my positions. And when I say my short strikes have been breached, right now this is where the current position is, this is where my short strike is, so this position has moved down from where I originally placed it, because assuming that I'm placing my positions centered around the current price of the underlying security. So it has not yet breached the short strike, but it's on its way there. So if it ever comes over here and goes past my 164 strike, that would be considered a breach, and with my current strategy, that would indicate it's time to take action. When that does happen, what I like to do is first and foremost take my untested side. So let's say the position gets over here, the position's over on this side. I want to start bringing this guy in by half of the distance between them. So let me say that again. So right now the math is not easy because it's at 179 and 164, but let's do some math real quick together. So let me clear this guy out real quick. So 179 minus 164, I'm not going to scare myself by trying to do math in my head on a video. So there's a $15 spread here between these two strike prices. So what that would mean is that I want to bring this guy down, roll him down by about $7 or $8. What that will do is it will greatly lessen the directional exposure that I have in this security. It'll make it where if my delta here is about 60 or so on the position, or 30 to 60 on the position, it can cut that down significantly. It'll also take some profits because while this a short strike is being breached and is actually going to be in the money at the time of me making this adjustment, this strike will have almost achieved its profit target. So I'll be doing some profit takings over on this side, which is going to mitigate the losses that I'm seeing on this side. So that's step number one. We haven't gotten there yet with this position, but if it has another down day like this, we'll probably be there pretty quickly. Let's go ahead and look at our next position here. This is EEM, the Emerging Markets ETF. And again, because these guys are all so correlated, very similar story. It's on its way down, but it's not there yet. And XLE, this one has not been impacted quite as much. It's actually it's only gone down by less than $1 from last trading period. So that one's doing quite well. And it looks like I have a very small $1 profit so far on this trade. So nothing to write home about yet. So let's move on to placing the next trade, because when you have this big pop, we definitely want to be able to capitalize on that. So what I like to do on this is I'll switch my watch list over from my positions. If I'm short on time, like I am today, I will go into just my Big 10. That's kind of the ones that I always really want to have a position on. In these positions, they're nice and diversified, and they're the big market ETF, so I don't need to do a ton of research into earnings or I'll look for dividends, but not really that big of a deal when it comes to research here. So going down, I have this currently sorted. If I go over here, you'll see I have this sorted by highest IV down to lowest IV, so you can definitely tell IWM has had an increase in implied volatility since the last time I looked at it. So let's go ahead and see if we can put a position on together. So I like to trade from my table view. And what I want to do is really target, they say on Tasty Trade, 45 days till expiration. I like to extend it a little bit more. The 60 days is really a nice sweet spot for me. And the reason for me wanting to have a longer time period than the 45 is because I don't want to have to get stuck with my kind of busy schedule and not always being able to trade the markets and watch them like Tom and Tony do on the show. I want to make sure I have enough time to get out of the trade early before gamma, which is that accelerated effect of changes in the stock price, before that Greek really starts to take hold and makes it more stressful. My goal with options trading is to create consistent income over time, not necessarily to hit the ball out of the park, but to provide a good diversification benefit to my other long stock holdings. So I want to look for a nice, positive expected return. I want to make money from this, obviously, but I don't need to swing for the fences by taking on way too much leverage or way too much volatility along the way. So let's go into the May expiration cycle. I always want to look at my deltas. I recently have definitely been favoring the kind of heavy delta neutral strangles. What I mean by heavy is instead of kind of going out to that one standard deviation mark, I can't even go that far. Let's go out to all my strikes. Instead of going all the way out to maybe this would be a one standard deviation strangle thereabouts. Let's go to the 16 delta. This is nice. You can get $200 from placing one contract here. The downside to it, though, is I guess there's no real downside. It's just I prefer to have a bit of a tighter range because that way I can really scale up my credit and stay active with the stock as it's moving. So what I like to try to target is around that 30 delta mark. Let's see, did I get all the way there? Let's go. I'll do the one thing I want to check before I make this final trade is that I do have positive 22.13 beta weighted deltas, and that means that my overall position is a little bit skewed to the positive side. I hope you can see that drawing there. So if I wanted to try to use this trade to balance out where I'm at, which I do, I want to always kind of, every subsequent trade should help me get to where I want to be overall in my portfolio. I want to skew this to where my negative deltas are slightly higher or slightly larger in value than my negative deltas. So what I'll do is I will, put this guy on the 30 delta. Let me scroll down here. So when he's at the negative 30 and he's at the positive 26, I have a net impact of 0.04 deltas. It's not a huge change because obviously this is a delta neutral portfolio. I'm not in the business of picking direction. I've tried that in the past, and ultimately it feels a bit too much like gambling for my sakes. What I like to do is work off of probabilities, which I guess you could say are still gambling on the occurrence by occurrence basis, but if you take them all in aggregate, the numbers tend to work out. So I like to control my position size, control my deltas, and let the chips fall where they may, and just continually repeat that process day in and day out to hopefully make some money. So you saw we went from about $2 up to $3.89 on the credit. So let's see if we can put this guy in. I'm just checking everything here. If we wanted to, we can go to the analysis section. And before even placing the trade, you can kind of get a view of what this is going to look like. And you can see the theoretical profit and loss statement depending on where the position lands at different time periods. You can also evaluate at different look forwards. So let's say we kind of scrolled up. And if the position were at that point in time, you could see kind of where your numbers would be. So that's good enough for me. Let's go ahead and review and send. And so what you can see here is that if I route this trade, I'll have a reduction of $2,500 in buying power, and my options buying power will kind of be dropped down to that level there. So let's go ahead and see what we do. I'll see it's working. I can bounce over to my activity section, and then I'll show that position working. I do have two positions here. These are working closing orders, so I've automatically set those at my profit targets for those trades. I can see the price of the trade here. All right, let's try to rework this guy. Just because we're on the line together, I want to see if I can get this guy routed. So I'll drop it by 1 penny, and got filled. So there you go. That is kind of placing a trade live today. I'll publish this video in a little bit. I will also, I'm getting ready to email out these trades as I'm making them. I'm doing a couple little tweaks behind the scene to make sure that I can work all the tech out and that I can send you guys real-time-ish. So within a few minutes of me placing the trade, just sending out not a video like this, but a small little snippet of my thought process along the way. So hope this is helpful, and hope you guys have a happy day trading, and hope your families are a little healthier than mine are today. So take care, everybody.